earnings that have come out so far and what's playing out in the bond market and rates? How do you see it?
Well, the market is right now trying to figure out so many things, in particular earnings and the economic outlook going forward, because the Fed has been injecting a lot of very strong medicine to slow the economy down, demand down, and that medicine really hasn't yet taken effect because there's a big lag. And so the market is trying to figure out how hard that medicine and how hard that downturn will be. And there's really no clear way to figuring that out until the data starts coming out. So even though the earnings so far that have been reported are okay, it's the next few quarters, not necessarily the next one, but the second and third quarters beyond where we are today, where we're starting to see the effects of that slowdown. And there's really no clear indication of how hard the effect of the braking will be because of the lag. So we're really navigating a little bit without a clear path forward. So it's going to be very reactive and volatile, therefore, to whatever the latest data point is. So I think the expectation and the consensus is we will enter into a recession, an economic recession. That will mean an earnings recession, but just how deep is unclear to most people. So it's going to be volatile for a while until we get a clearer picture. I'm afraid that what's going to happen.
If I'm reading between the lines on what you're saying to me right now, Ernesto, it sounds like you think we are in the midst of a bear market rally, that this is not necessarily sustainable here.
Well, the market's quite oversold, so you're getting a rally, whether it's a bear market rally or we've seen the bottom for a while. That remains to be seen. It all will depend again on what the Fed and the market is trying to figure out, okay, how high is the Fed going to go? Looks right now it's going to be 5%, but just at the end of July, it was 3.2%. So there's been a big shift upwards in how high the Fed will end up going in their terminal rate. And the other thing is, when will that terminal rate be achieved? Right now, it looks like it's going to be March or April of next year, but the speed at which they're raising might make it be sooner. And when will they pause? And so as the market tries to figure all of that out, the question is how hard will the downturn be? And that's where we don't have a lot of clarity. And then the bear market, the market will rebound way before, as soon as they have that clarity. So to answer your question about the bear market, is it the ultimate rally? It's unclear, but the point that is very clear is that the market is quite oversold right now. The negative sentiment is quite pronounced, as Steve was just pointing out in the earlier segment. So there are conditions right now to establish some decent short-term to medium-term bottom. But again, if the Fed rate continues to raise rates quickly, something else might break. And that's another concern. The financial system is under stress because of the speed of the rate hikes, and that creates a lot of dislocations. And out of the blue, something like the UK gilts market was not caused necessarily by the Fed, but it was helped by the Fed, and then their mismanagement of their policy announcement, their budget announcement. So all these things come into play. So
we're going to be asking whether or not Truss's resignation quiets things. I wonder, Ernesto, what you make of the fact that 3,700, basically where we are now, was where we were during the summer when terminal Fed funds was nowhere where it is now, and the 10-year was at 3. Yeah, and then you saw that massive rally starting in June through August until the inflation data really reverted. It had kind of softened, and then it reverted back to really, really hot inflation, and then the Fed just really brought the hammer down on the rhetoric and just said, we're going to be very, very aggressive in raising high. And that killed the rally and brought us back down to new lows, and sentiment turned again negative. So right now, I think we're close to what we call a bottom. But if something breaks and something that creates big financial stress, not just, for example, meme stocks not working or whatever, but something big, then the Fed will have to back off and all bets are off, because then it depends on what the stress is.
All right, Ernesto Ramos, thanks for joining us.
Bottom line, though, thank you.